if you were a trader and you were saying, I'm not going to trade here at all, and I'm only going to trade here, you will get worse execution on average if you are not factoring this in as like one of your venues that you want to access. Now, if you're the type of trader that's like, I sit on Bybit and I don't touch anything else, all my assets are there. Okay, cool. We're coming for you too. We're going to bring you across and say, don't be on Bybit for all of these reasons, and we're going to give you better execution, lower fees, etc.
All right, everyone. So on Empire, you obviously know that we talk a lot about the institutions coming into crypto. And that is why we are super excited to share that we are hosting the Digital Asset Summit. We've hosted this since 2019. It's coming up in London, March 18th to 20th. Don't miss your chance to get ahead of the curve. You can get 20% off with code EMPIRE20. We'll see you in London. This episode is brought to you by Toku, the first comprehensive global solution for both token compensation and tax compliance. Toku makes implementing global token compensation and incentive awards simple. With Toku, you get unmatched legal and tax support to both grant and administer your global team's tokens across the entire token lifecycle. Make your token grants easy today with Toku. All right, everyone, we've got the benevolent dictator himself, Mr. Kane Warwick. Kane, welcome back on the show, man.
Hey, what's happening, guys?
What's up?
Good to see you.
So I was trying to wrap my head around everything that you're doing with Synthetix and Infinex, and it basically, you've got all these experiments going on, right? Deploy to Base, deploy to Optimism, deploy Carina to Ethereum, Andromeda to Ethereum, SNX chain on the OP stack. And the way I could best maybe summarize it is you spent 5 years working on the supply side with Synthetix. Now you need to solve the demand side with Infinex. And I think just the best starting place for this episode is maybe get us up to this point of like, how do you see Synthetix going into 2024? And then that can pivot us into this Infinex conversation.
Right. Yeah, I was like, how many podcasts do we have here?
Yeah, exactly. And yeah, Bex was like, you might only have an hour, and I was like, I'm not sure about that one.
Yeah, I know, right? Let's see how we go. Look, I think the situation in Synthetix today is we have product market fit in a single product in a way that we've probably never had before, like actual like longevity of product market fit, right? Like the thing's actually been working for like a while, and we've tweaked it and improved it, and it stayed working, and the market's changed and it stayed working. And so I think that like this is something that is fairly novel in Synthetix. We've had like atomic swaps and like spot trading and like, various things that like kind of worked for a while, and then, the market moves or, something shifts and it doesn't work any longer. I think obviously a big test of this is going to be the upgrade and launch of Perps V3, this new Perps upgrade. And I guess, one thing that's kind of cool about it is it's like not actually that big of an upgrade. It's like 4 minor improvements in like multiple directions, but it's not like, all right, everyone, we got to totally change the entire model and like rip everything out and like reconfigure it because nothing's working. It's like it's directionally working. It's been working for a while. It's like consistently gaining momentum. So now how do we sort of tweak this, right? And then obviously it's Synthetix. So, we have to make it harder by like picking a new network to deploy on and like a bunch of other stuff, right? But like in principle, it's the same thing, right? And so that's kind of setting the scene, I guess, for like where Synthetix is at now. In the end of 2023, going into 2024, is like we've got a system that's working. We are going to deploy this new upgrade that just improves a bunch of things, and then we're going to run some additional experiments in parallel to that. And one of them is like the collateral question, which is a huge question. Santiago, you've had heard this debate for many years, right? About like, is SNX good collateral?
I was going to say, it comes up time and time again. It resurfaced during the Luna FTX debacle, right? Everyone's like, well, how is Synthetix any different? It's being collateral. And, maybe, I don't know if this is a good moment to do it, because I think it would be actually super helpful for people to appreciate how Synthetix has managed to survive all these years and thrive.
Yeah, what's the difference between Luna and Synthetix? There's a couple of differences. Yes, they were both systems that are collateralized by their own native token, which is worthless if the network doesn't work, right? Like that's the fundamental concern that I think every mid curve to like maybe if you're generous right curve person has had about this, right? And like it's like, yes, if the network fails, then it's worthless. Just like definitionally, it has to be, right. The thing has value. The token has value because the network's working. If the network stops working, it has no value, and the whole thing collapses, right? So when people are like, "Can it collapse?" It's like everything can collapse by that criteria, right? Like if the criteria is like, if the thing stops working, does it stop working? Then yes, of course, right? Like it stops working. And so, the question is like, what are the ways by which it can stop working? That's the big thing, right? And I think the difference between Luna and how Luna scaled up with this like Ponzi interest rate is if the interest rate even, and like, I mean, there's some real world macro parallels over the last 18 months, right? But if the interest rate even looks like changing, does everyone instantly flee? And the answer in the case of Luna is like, yes, right? Like there were a couple of gestures of like, maybe we need to lower the interest rate. And it just creates this like rush out the door where it's like, whoa, I'm not going to get 20%. Well, then this is not worth the risk, right? Because the risk is like ruin. And so then, it's like, well, maybe we'll lower it to like 18% or like 16 or something like that. And everyone's like, we see the direction this is going, right? And, it's a game of musical chairs, and all of a sudden the music like, they turn the volume down like by 10 decibels and everyone's like out of the room, right? Like it's just like fleeing. And so when you look at Synthetix, you're like, okay, cool. So what is the mechanism by which that can happen? And the mechanism by which it happens is fees stop being generated. If there's no more fees, then the token's worthless. If the fees go to zero, right? But it's not reflexive in the same way. Like the token price going down doesn't impact the fees, and fees going up doesn't necessarily impact the token price, right? Like they're related, but they're not like so tightly coupled. And so the reason why Synthetix has survived is it's had like fairly conservative parameters. You can only borrow so much. You have to have this like 5 times collateral ratio, right? Backing the network. And it's consistently produced revenue for, a really long time. And like, that's it. That's the secret sauce, right? Like the thing that stops it from collapsing has been consistent. And so when someone's like, but what if everyone stops trading? And it's like, well, if everyone stops trading, then it's worthless and you should shut it down and move on and do something else. Like, obviously.
Right. And I guess to add a little bit more context to that, in the case now, as we know, Chai was an absolute wash. I mean, it was fake numbers and it was not even there, right?
Some
Chai
of us
being
knew
like
it
the
the whole
consumer.
time.
Yeah. Well, I mean, I asked though a number of times, like, hey, because that actually was the most interesting thing from my perspective. It's like, okay, they're getting actual consumer. Whenever you see something claimed to have a lot of consumer traction, you're like, wait a minute, like,
Well, we had
there.
a very combative episode with. Do you remember that episode with
Yeah.
with DAO? It was one of those combative episodes we've ever done on Empire.
So yeah, I mean, I think that was the big difference now, and um, anyways, I want to go back to obviously V3 perps, and perps seem to be all the rage these days, and you have GMX, you have other copycats as you call them, which I'm curious, maybe if you can touch a little bit on that. What's the main novelty historically? Some of the challenges that have you know the challenges around deploying perps on chain and why it's different now, and what does the trader experience look like?
Yeah. I mean, if I may, I can't help but like get embroiled in the drama, right? Of even the
It wouldn't
Terra
be a
thing,
Kane
even like
episode if that were, I mean, this.
so like I find it so interesting, right? Like, the whole mechanism by which Terra worked, right? And like, I've tweeted about this before. Like there was a period, like I'm a very petty person, right? And I hold grudges for a really long time. Like you can even see that tweet tonight, talking shit about Tezos, right? That's because like Arthur like fucking like brushed me one time in like 2018, and I'm like, one day I will get him back. And it's that like snarky tweet about like how dumb it was to use OCaml to like write your whole blockchain. And like it's like it's very petty, right? But like the thing that I always found interesting about Doe was like even from the very beginning when I met him, I was sitting on stage next to him, and Jordan was in the audience, and it was 5 stable coins. There was like a representative from Maker, I think someone from like Basis, and they were kind of going through, and they're like, what's your stable coin design? And I'm sitting there, and I'm like the second last person to talk, and Doe goes, and he literally describes Haven. And I was like, what just happened? I look out, I like Jordan, who was like, one of the other like early Synthetix people. And I was like, looking at him, and he's looking at me like, is this real? Like, are you? And I was like, okay, cool. Like, but but it's in Korea, and like, I talked to him later, and he's like, the angle is like payments, right? Where like we've got all these merchants or whatever. And I was like, okay, cool. And then like a year later, no merchant adoption, like nothing, right? And then bear market hits, real hard, like COVID, everyone's kind of disappeared or whatever. And I'm like chiseling this guy's grave. I'm like, Basis is gone. Terra's gone, like, all of these like Flamingo / whatever 18 other names that it had is gone. Like, all of these things have disappeared. And then all of a sudden Doe just comes back out of nowhere, and he's like, actually, no, like all of Korea is powered by this thing now. And I was like, that's just like not credible at all. Like how is, and then just goes out to a bunch of VCs and raises a ton of money on the fact that this claim that like there's 10 million people using this network for payments. And I was just like, that's insane. Like how could we possibly, like, surely someone can go to Korea and like disprove this, but like there's something about Korea where like it's impenetrable to people in the West. They like have no ability to like,
I'll tell you my side of the story. I met him at Stanford. I think he had gone to Stanford. I met him at a cafe there. He was raising a seed. I'd invested in Haven, as you know, and I was like, well, no, it sounds too similar. And then he was very combative. Anytime you pressed him hard on any diligence question, he had the knack and the ability to make you feel really stupid for asking the question. And I guess a lot of VCs when just like fall prey to that and be like, Sam, I think had a little bit of this too. And then for context, he went and did, so we copied the stablecoin design. He then copied the with Mirror, I believe. And I looked at Mirror as well. And look, it was a very sweet deal on a number of fronts. It was like attractive, the terms and whatnot. But I remember calling you and saying, hey, look, I think it looks very similar to Synthetix. We're going to have to pass on this. And one thing I did not want to do at the time was cross Kain. He can be benevolent, but he can also be a supreme leader.
That would not have gone down well.
Kain, with Synthetix, I mean, the way I understand V3 is, I mean, it's always been a perps platform, but now you're getting into spot, right? And there's this like kind of new approach.
Well, it actually was it was a spot platform, and spot didn't work, right? Like that was the original.
Well, that's what I was going to ask is like, why come back to it? It feels like there's this with Infinex and Synthetix V3, kind of this goal to be on par with centralized exchanges. The new collateral model, which we were just talking about. And
look, I think my sense is that like perps remain this sort of breakout product, right? In crypto today, right? And when I look around at the market, it's like, what are the things that DeFi can go and credibly take from CeFi and from centralized exchanges? It's perps. There's 30, 50 plus billion a day in notional volume, and DeFi is doing like a billion of it. Right. Maybe a little bit more on a good day. And so, I look at that and I'm like, okay, like there's just a huge opportunity here to take that on versus say spot, where like, I think DeFi has made better inroads. Uniswap has done a really good job. And, there's a whole bunch of like aggregators of like different, like AMM platforms or whatever. So to go after that feels more challenging, I think. Which isn't to say we won't have spot tokens. I think there are use cases for like a synthetic spot token, especially for things like bridging. But at the moment, the obvious focus has to be perps. Like that's the product that people care about and that will move markets, I guess.
Yeah. So if we accept you had this one of your blog posts. It was like, if we accept the Synthetix protocol needs to be where the users are, how does it get there? And there are these kind of 3 approaches that you guys laid out. I'd be curious how you made those. I think one of them was deploying. It was like fork it all the way, basically deploy a fork of Synthetix on every single chain. The next was, I think, implement this. It's like the unified liquidity theory, and the next one was I don't remember the next one. Something about minimizing messaging or so. You can tell me the third one, but I'd be curious about like how you thought about those 3 decisions and like how you came to the conclusion of what to actually do there.
Well, so I think we've always had this pretty grand vision, right? Of like when we get to a point of multi-chain synthetics, that it needs to be a unified protocol. And that, I think, has been constrained by the fact that synthetics, if you lose the sort of fungibility of the network and of the tokens and of the debt pool and all of these things, it kind of breaks down, right? And we had an aversion to just like kind of forking it and deploying it onto different networks for a couple of reasons. One was like fragmenting liquidity, because you also have this problem like SNX is the only collateral and it's a finite resource, right? Like you can't really fork the token onto every chain. I mean, you could, but like it doesn't even really solve the problem, right? Like it probably, crypto efficiency allows you to like get away with that for a little while. You can like fork it 2 or 3 times. Eventually people are going to catch on to like, wait, this is just the same thing. You're just printing more of it every time you go to a new network. So we had all these constraints where it was like, okay, we need this like unified cross-chain messaging thing. And really, I think the actual answer was no, this collateral constraint of SNX and fragmented liquidity is what's holding you back, right? Like we don't even have a credible path to this unified messaging like protocol where, the state of every single deployment on every single chain is in sync. Like I don't think even, Chainlink or any of, I don't think there's anyone out there who's doing cross-chain messaging who's like, yeah, we're about to nail that. Right? Like that's just a long-term thing. And so it's like, okay, we can wait for that, or we can, maybe pivot and try a different approach.
And just for context here, because I remember you being one of the first ones to really start thinking about an L2, given how fee intensive Synthetix was. You had to claim back to fees. You had to claim your fees every Wednesday. I remember I had it,
You still do.
Wednesday,
you still do.
It just is like coffee, right? Just getting coffee every Wednesday. You had to claim your fees, and it was very expensive for many users. And so you then start thinking about an L2. You become very close with the Optimism team. People should go back and listen to some of those episodes. Now you're in a state where, okay, you're deploying Optimism. I think you were one of the first, if not the first. And now you're facing a different kind of challenge. I think I'm looking now in an environment where over the last couple of weeks, the market's been, up only. And in this market environment, which you've not had, some of these mechanism designs start to crack. Like, because the bigger challenge that I think people don't appreciate in Synthetix model is anytime you're minting and claiming these fees, you're essentially taking short on a market that can be very volatile, and you don't want to be caught. If you're always short on crypto, you can lose a lot of money. But the way that happens in the Synthetix model is a bit different than a GMX model or some traditional kind of market maker being consistently short. So I want to perhaps now or later dig into that distinction, because I think it really ties into, can this perp really work on chain and can it scale? Because you always need to attract a pretty balanced market where people are taking both the long and the short, and the protocol is always net neutral because you don't want to be taking any market directionality.
So I think this is a really good question. And again, I tweeted about this maybe like a couple of weeks ago where I was like, I'm probably the person with the single largest lifetime losses, right? Staking or LPing in a non-delta neutral derivatives protocol. And like, it's partially a joke and partially like not even funny at all, right? Like the amount of money that I've lost is like in the tens of millions of dollars from staking in Synthetix for a whole bunch of reasons. The primary reason is that for the vast majority of its life, until a couple of synthetic CCs turned up and they were like, wait, what if we didn't have to have directional exposure, right? The old school Synthetix way was, yeah, directional exposure is inevitable, right? Like you can't avoid it. If the market's going down, then people are going to want to be short. And if the market's going up, people are going to want to be long. And so your job as a staker is just to hedge this, right? To, take your assets and hedge it. Now, that is easier said than done, right? And the market can move really quickly. And then, also you do a couple of weird experiments and all of a sudden the skew in the network is maybe different to like your directional bias. And now like I'm long, but then the market's crashing. And as the market's crashing, my debt's going up. And so I'm losing money on my hedges and my debt's actually increasing, right? Because of weird issues with like wrappers, and we don't need to get into the details, but like we just didn't have a good way of scaling the collateral and scaling the amount of assets in the network without doing weird things like wrapping, which just increased this skew in the network, right? It forced us to almost be like, no matter what direction the market was going, we were kind of positioned in the opposite direction, right? And it has to do with curve pools and a whole bunch of weird stuff, right? And then a couple of people came along and they were like, well, that's dumb, right? Why don't we actually build a mechanism where the market actually brings it back into alignment, right? And we'd been working on that for a while in this like perps thing, and we tried to do it, and the first version didn't quite get it right. The incentives weren't really aligned, and then we tweaked it again. And this new version that's been operating now for like a year, the latest version, it's like you can look at some of the charts. I don't have them here, but maybe we can track them down for you. But like they're like some of the most beautiful charts you can imagine in crypto. Like it's just a line that like ticks along, and there'll be like a little spike and then it comes back down, little spike, and like the spikes are for like minutes or hours sometimes, and it's just like this perfectly delta neutral long short thing that just keeps going and works. And the upgrade, the Perps V3 upgrade, just makes it even better. Increases the incentive alignment for people to bring the market back into alignment. And so all of a sudden, what used to be, this thing where you needed to get paid a ton of yield to justify taking the risk of staking in Synthetix, all of a sudden now, like you actually have no market exposure. You don't have to hedge yourself at all. Like the thing hedges for you. And the market has not yet worked this out. That like staking SNX is no longer this high risk activity. It's actually a super low risk activity where, you still have black swan exposure or something like that. But even in weird stuff like Ripple, when that Ripple thing came out and Ripple spiked crazily and then crashed back down, then spiked again, the total exposure of the debt pool is like $1 million. And this is how funny it is, right? Like back in the day, losing $1 million LPing in Synthetix was like a Tuesday. Like it was not even like an event. Like it was just like, oh yeah, of course. Like we're up $1 million, we're down $1 million. Like it was so volatile, the debt pool. But all of a sudden people got so used to this that they were like up in arms that we lost. And I was like, guys, like losing $1 million is like, that's the entire network. That's, it's a $1 billion network, and we lost $1 million in a day, right? And then people are like, this is unacceptable. So it's just really evolved to a point where, the expectation has just shifted of what you have to do. But that's not the case for everyone.
Right. Well,
not everyone has worked this out yet.
Right. And I wanted to dig deeper into that mechanism. And I guess for the uninitiated, because perps are very novel to crypto. Historically, it's a market that has been dominated by centralized exchanges, primarily, non-US. Now Coinbase has launched their own. But it's a really, really capital efficient way to get exposure to a particular token. Historically, we talked about this in a prior episode. It's relied on this funding rate to keep kind of the market in check of rewarding any imbalance, right? Whether you're long, if the market's really long, it rewards someone to go short, and vice versa. With this funding rate mechanism, which is constantly dynamically adjusting based on kind of the flows. Um, can you talk about how that mechanism is working in Synthetix, um, and and then go into kind of the differences between other protocols?
Yeah, so I think the perp design, right, that like BitMEX initiated, it's really genius, right? Like it solves a whole bunch of problems with futures that I think, like in terms of financial engineering, uh, you know, um, novelty or whatever, like it's one of the most amazing things that's been done in crypto, right? But the way that you keep prices in line, right, with a traditional perp is people can keep buying, right? The spot price of Bitcoin could be 30K, right? And because of leverage, if people are directionally long, like they can just keep pushing the price up. There's nothing to stop to say that the perp can't trade at like $50,000, right? But there is, and this is the key sort of mechanism design improvement, which is the funding rate. You can keep buying as long as you want, but keeping that position open will cost you an increasing amount of money to the point where it becomes punitive, and people are forced to sort of close their positions, right? And so that is what keeps the spot price and the market price of the perp, the derivative, in line. In a AMM style Oracle based perp, this is not a problem for us. The spot price is the Oracle price. They're the same thing. They can't actually deviate. Now, the problem with them not deviating is you've got a ton of degens with a bunch of leverage that want to go long Bitcoin, and the price just stays 30K, right? They can just keep going, you can hit that thing all day long and it goes 30K, 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 30K. And, you've got all this directional exposure because you're not actually shifting the price away or tamping down this thing. And so the mechanism that we use in Synthetix is we say, if the market is directionally long and the skew in the market is skewed long, then those people pay the funding rate, which is kind of the same mechanism of, if the price is out of alignment, then, the longs pay the shorts, right? We don't have the price being out of alignment. What we have is the market being dislocated, where there's too many longs and not enough shorts, right? Because you're not trading against each other. You're trading against the AMM. And so that solution was the right solution. It just took a while to like dial in the exact parameters, and we've got them dialed in now. And that's where I say this graph is like, as soon as someone comes along and hits that and gets the skew out of alignment, arbors come in and just go boop, bring it straight back down. So yeah, that's how it works and why it works.
Yeah, from a trader experience, the funding rate oftentimes has been less competitive on chain, and the fees, of course, have been higher. Are we closer now to parity? Well, certainly, I mean, there's a subset of users that refuse now to use certain perps because they don't want to use Binance or whatever. But are we kind of, how close are we to being at parity with the exchange experience, on the off-chain experience?
Yeah, so I think like my intuition and I don't even know if this is accurate, but my intuition for like perps that are based on this AMM model is that the funding rate on average will approach zero as the open interest gets larger, right? Like, because the dislocation of a single person coming in and like hitting, $1 million notional position just doesn't really move the dial, right? If you've got this huge bucket of open interest, you've got this tiny little thing that's kind of moving along, right? And that will compress the funding rates. And so the fact that funding rates are, I think on average, like in the large markets, I can only speak to Synthetix, but it's like 2 to 3 times higher on average. Which is not amazing, right? Like that's something that we should be aspiring to improve. I think people do sometimes get confused because they look at the like 8-hour funding rate on Binance or something like that, because the way that funding rates are kind of managed.
Yeah, they're also not uniform.
Yeah, it's not uniform. It's a bit weird. They've got different lengths of time for funding rate, and they're discrete intervals versus like continuous funding. My view is honestly continuous funding is a like feature, right? It's not a bug, and these discrete 8-hour intervals, even though it gives you, in theory, like more certainty, as an arbitrage or whatever of what the funding rate will be, it's actually an inefficiency in the market. The market actually can be less efficient because you're not reflecting the actual current state. You've got this weird 8-hour lag of like where the state is. And so you end up with these kind of swings around those points where the funding rate changes, where people are closing and opening positions, and it just creates market inefficiency. So like having anything in continuous time is going to be more accurate. So I think it's an improvement, but it does cause people to get a bit freaked out because they're like, oh, the funding rate is this, which is the continuous like 1 hour funding rate versus like an 8-hour, whatever. But if we had, $1 billion of open interest in the BTC perp market on Synthetix, I think the funding rate would drop down to, close to or maybe even less than. We don't really know. You kind of need to see empirically how the market responds, but like it would compress it significantly, right? The open interest now is much, much smaller than most of the perp.
It's just a function of size, right?
Yeah, like in theory, right? Like you don't know how people are going to react because if you jack it up, then maybe someone comes in and like hits you with $100 million notional trade, which great. I would love that. That would be awesome. But we'll sort of see. Like over time, it has compressed a little bit.
Yeah.
And what kind of traders are? How would you kind of characterize the pool of traders that are using this?
So this is an interesting question because I have no idea. I've been for the last 5 or 6 years operating in an environment where we do not talk to users nor really care about their preferences.
We build things in a vacuum. DeFi, Kane? Like, is that just because
Yes.
you have if you build an app in fintech, you have so much first party data on those users. You have none of that in DeFi, and it's just not worth the headache to try to figure it out.
Like it's even maybe worse, right? In Synthetix, we went out of our way to completely block the ability to capture any customer data. Like we actually like disconnect, we had heat maps and stuff in the early days, and there was a little bit of kind of uproar like back in like 2019 or something like that. And I was like, you know what, actually this is fair. Like if the purpose of this is for it to be this, open permissionless thing, why are we capturing all this like metadata about people? We shouldn't be doing that. And
so that's what user data,
but you certainly have certainly have the ability to understand, okay, the average user that is using this perp in Synthetix also is interactive with GMX, as funded from Binance.
100%.
His average wallet here is 10,000, or you kind of segment it into wallet sizes. And perhaps you
can do that. The question is, do you do that, right? And certainly in the case of, I think, I can only speak for Synthetix. Like we didn't make an effort to do that. It just wasn't something that we did, which is it's its own thing, I guess. But what's interesting is over the last like 3 months, as we've been working on Infinex, there is a different social contract. At least like this, it feels like implicitly there is, right? If you turn up and you put a username, password, email, in and create an account there, and obviously, you need to sort of accept there's going to be some, tracking or whatever. It's a bit different to like turning up to what is supposed to be a very thin client layer in the form of like a DeFi dApp that really shouldn't be like tracking you or doing or storing information about you or whatever. It's just supposed to be a very thin layer that sits on top of the contracts. At least ideologically, that was my view, maybe wrongly, but like that's just kind of the view that we've had. But if you've got like this rich Web 2 like experience where you're actually inside of a platform and the platform is giving you access to the things, it feels much more reasonable to identify what users are doing and like what are they clicking on, what are they not clicking on, where are they getting confused, and so all of a sudden we've got people that are like doing user interviews, and it's hilarious because like people are saying things that I'm like, that would have been good to know that that was the thing. Like never occurred to us really to like talk to people. We talk to them in Discord, but like, it's not a structured
Synthetix
environment.
Discord is not exactly
negative
well.
signals.
They're very vocal. I guess it's not very user inter.
All right, everyone. So we talk a lot about the institutions coming into crypto on Empire. Santi and I are both headed out to London March 18th to 20th for Blockworks' 8th ever Digital Asset Summit, DAS. This is an institutional buttoned up conference that we've hosted since 2019. I like to joke that it is probably the last remaining kind of suit and tie event in crypto. People are still wearing suit and tie. It's pretty funny, but you'll actually hear from a lot of the largest institutions in the world coming from Standard Charter, FIS, JP Morgan, Framework folks coming out, Wintermute, Van Eck, Goldman Sachs. There are a couple big themes of this conference. One, Bitcoin catalysts, the halving and the spot ETF. Two, a view from the buy side. Three, RWA's tokenization and stablecoins. Four, global regulatory frameworks. Five, institutional infrastructure, including banking and payments. And six, the macro case for crypto. If you have anything to do with the institutional side of crypto, you have to be there. Santi and I got your back. We hooked you up with a 20% off code. It is Empire20. There is a little competition running internally at Blockworks to see who can drive the most number of tickets. So help Santi and I out. Register with our code and you get 20% off. That is Empire20. This episode is brought to you by Toku, the first comprehensive global solution for token compensation and tax compliance. If you say yes to any of the following 4 questions, Toku is a no-brainer solution for you. Number 1, are you planning to launch a token? Number 2, is your token already live? Number 3, are you currently granting your employees or contractors vesting token awards? And number 4, are you trying to figure out how to take care of taxable token events for your team? If yes, you have to get in touch with the Toku team. Toku to High Level makes implementing global token compensation and incentive awards simple. You get unmatched legal and tax support to both grant and administer your global team's tokens. Toku navigates this across the entire token lifecycle, from easy-to-use token grant, award templates, through tracking vesting to managing tax withholdings. Toku makes it simple for leading companies in the space, including Protocol Labs, DYDX Foundation, Minute Foundation, Hedera, Gnosis Safe, Gitcoin, and many more. Reach out to Toku, that is toku.com/empire, toku.com/empire. Click the link in the description or DM me on Twitter and I'll get you connected to the team. I have one more question actually about Synthetix before we move on to Infinex stuff. We were talking about optimism. Kane, why? When you think about L1s and just like the execution layer, in a perfect world, users would just go to the best product, right? And they wouldn't really care about the execution layer. But it's clear because databases have tokens that they do care about the execution layer. I'd just be curious to get your updated view on like how long this kind of fragmentation of users at the execution layer lasts.
Until someone comes along and aggregates the users at a layer higher than the execution layer. And that, like, that's not supposed to be like a cryptic response, right? Like at the moment, this is the way that we interact, right? Most of DeFi interacts with smart contracts, right? We have our own wallet that we own, right? We have like a plugin or a hardware wallet or some combination of those, and we turn up to Aave, right, or Uniswap or whatever, and we click Connect Wallet, and I take my thing that I own, that I control, right, whether it's a plugin on my browser or it's a hardware wallet, and we click Connect. I connect my thing, I do my thing, and I disconnect. Bang. And the relationship is like very transactional in a way that doesn't exist anywhere else, right? And then I go to a different app and I click that and I connect and I do the thing and I disconnect. There is no sort of longevity of relationship there. Like I'm not like a user on the platform of Aave the way that I am like a user on the platform of like Instagram, where like I have an account and I go to the thing and like the information's in that thing. And so there's no way to really aggregate users or aggregate, even liquidity or assets or whatever, right? And so one of the things that I think about Infinex that we will be able to do is we will be able to say, you have an Infinex account. You sign into that account. It's your username and password that you put in. Once you put that in, you turn up and there's a whole menu of things that you can do. One is perps, one might be spot. It might be spot via Uniswap. It might be spot via CowSwap. It might be spot via some aggregator or something like that, right? You can also stake ETH. It might be Lido. It might be Rocket Pool. It might be, an aggregator of both of them, right? But you will have your assets on that platform. When you think, I want to go and do a thing, you will not think, let me go and grab my piece of hardware where all of my things exist and bring that to the platform, connect it, and then disconnect it. You will just log in and all of your stuff is there. And you just choose the thing that you want to do. And all of a sudden we'll have like aggregation of users and of the user assets in a permissionless layer, right? Like it's still non-custodial. We're not doing a CeFi thing where we're like trapping their assets in a database and taking control of them. But we're going to have this like aggregation layer that sits on top of all of these smart contracts, and we'll be able to present to users new things as they arise, like friend tech or some novel thing, right? And like until that happens, people are going to exist on their favorite place where they like to connect their wallet, right? Like I connect my wallet to things that are on Arbitrum. Like that's a sensible thing to think in 2023. I don't know if that will be a sensible thing to think for the average user in 2025. Hopefully not.
Well, I mean, exchanges have been, if you look at the behavior that has happened in certain moments of time, like when Binance launched BSC, like all of a sudden all their users just went to BSC. They didn't know any better, I guess. And Coinbase has also been at times very opinionated, in which L2s, it allows direct withdrawals. And so, Yano, my view is we're just so early. Everyone's kind of a beta tester. Once you get like 10, 20, 30, 50 million people, that's the type of user that will just absolutely no care, may not even know what Ethereum or Solana is. You just will want to do stuff. And Kane, so you launch Infinex. I remember you called me and said, I think it's now's the time to really allow users to deliver an experience, to aggregate it and kind of curate. Is it fair to say your role at that point is when someone logs in, creates an account, you are curating the menu of things that show up, right? In a similar manner, when the first iPhone came out, Apple had a say, and still very much does, on which apps show up, what you can do and not do. You're potentially taking a view on which apps are secure, vetted, which are not. So is that true? And also, kind of what role as a developer do you take in this protocol, and how does a user experience compare to some of the other products that have been around for a while, like some of the easier wallets like Argent and Phantom and some of these others that have been around for a while, but I think all of them has, especially like Argent, like kind of has hit, in my point, like a wall. It hasn't scaled as much as I would have hoped.
Yeah, it's a good question why like the wallet thing hasn't worked, right? My sense is that one of the reasons is that the vast majority of people in crypto, for a long time at least, right, do most of their transactions on a desktop, like, or laptop. Like that's like, it's in browser, right? Like that's just where most of the activity happens, and trying to migrate them on there when a lot of dApps, like the mobile app experience is very weak, I would say, right? Is challenging, right? And like every time people try and do that, it's just a hard thing to shake, right? But I think that also has to do with like signing and like custody and a whole bunch of things. So the question of like why will this work versus something else? I think the primary thing in my mind is that you need to have a product that people want to use, like that they're desperate to use, right? And at the moment, people really want to use perps, right? There's a ton of people using perps. 95% of the volume that's happening is happening in centralized exchanges in people's databases, right? And most people, it's not that it's inaccessible to them, it's just not really like a good UX to justify them moving, right? They're willing to take the risk of getting rugged by a centralized exchange, which is, not even like a crazy idea, you know, in 2023, given what just happened so recently. And yet people are willing to take that risk because the UX is just not there for DeFi. And so if we can get the onboarding and user experience up to the same level, like the Web 2 level that people expect from like a centralized exchange, then I think that can be the wedge that we drive in to really kind of bring some users onto the platform. And having done that, once you go to user base with their assets there, right? It's hard to get people to migrate their assets to your wallet when they're already kind of on MetaMask or they're on, a hardware wallet or whatever, right? Like that's probably been the hard thing, I think. But once the assets are there, then it's a distribution channel. So to your point around like the app store, yeah, probably it starts curated. But one of the things we've already done as we've decentralized governance very rapidly has been to allow people to earn governance points from being a CeFi trader, from potentially being like a Uniswap trader, from being a GMX trader. And so the next thing that we add, let's say it's staking, right? So now if you are a Lido staker, a Rocket Pool staker, or even like a solo validator, you'll be able to earn governance points. And why do we do that? Because we want the people who are doing these things to be participating in the ecosystem and deciding which of the integrations are sort of most optimal, right? And helping to vet them. So it's this like, governance curated app store of every DeFi app, if you will.
Yeah. And the revenue model for you guys is you're taking some commission off of underlying user activities. Say they're going to Uniswap, you take part of the swap fee, or you strike referral programs with these protocols just on a per user basis. How does the monetization work?
Yeah, so Perps is easy because there's already a mechanism for this, right? Like there's rev share kind of baked in with these protocols. Uniswap just added a front end fee, right? Things like Liquidity have had like this front end integration fee for a long time. I think the more aggregators there are, the more pressure there will be, because if you have two lending protocols and one has this baked in and the other one doesn't, well, I can tell you which way governance is going to go, right? If Aave implements a 10% referral fee, the governance point holders are going to be like, well, we're going to Aave. Like that's just what's happening.
Yeah. I saw a tweet of yours not too long ago. It said there's a huge process to select the initial delegates, I believe, and you came out of that. I think there was a lot of reception. There was a lot of excitement, from within the Synthetix community, and then you tweeted, "My God, this is really painful," and something to the effect of, "We need better tools to identify really good delegates." And my question was, and my response to that was, I totally agree. I think when we find this type of tool, it will help fix democracy. And I think this is a broad discussion. Like, I mean, I think, look, every protocol out there at some point has a DAO, decentralizes governance. There's decisions that need to be made. You can be protocol light or protocol heavy. There still needs to be some sort of DAO that, for decentralization purposes and taking some sort of action on these decisions. What's your just now overall kind of house view on DAOs and governance, and how do we go from here? Because I think, especially in bear markets, the attention really wanes, and there are a whole host of vectors in DAO governance that I think haven't surfaced but are there. Especially, I worry in a bull market, some of these vectors probably will get exploited. Once these DAOs control sizable treasuries, can make protocol upgrades. I mean, it's some of them perhaps haven't been as carefully architected, and it might expose some pretty big cracks now or down the road. And then the participation rate has been zero. So, anyways, loaded question, but what's the house view on DAOs?
Yeah, look, there's a lot to unpack there. Somehow I've been able to maintain like my naivete around governance in spite of like years of being beaten over the head with all of the governance problems. And even like thinking about a bear market, I said this, as the market kind of turned a couple of years ago for DeFi, certainly, like now is the time, right? In a bull market, no one's ever going to focus on governance, right? Like everyone's like scrambling around to, catch the money falling out of the sky, right? Like governance is the least of our concerns. And in the bear market, like we need to focus on that. Look, I don't even want to say that we've made an attempt at that, and like I'll hold Synthetix particularly to task here, right? Synthetix over the last, I would say, 18 months has had the least governance upgrades of its life, right? So we've had 18 months of bear market, kind of down only, and in the lifetime of Synthetix, it's done less to upgrade its governance than it's ever done, right? At any other time. And I just I think the incentives are just not there, right? Like what I've realized is it actually requires someone, driving that. Like you need someone who's mandated to drive that and like force people to like make, because it doesn't matter whether it's a bear market or a bull market, it's never going to be the sexiest, most urgent thing to do, right? And so how you get a community to like invest in governance improvements, I don't know the answer to that, and that it's probably the thing that I'm most concerned about, just in decentralized governance in general.
Well, that's interesting because if I remember correctly, your governance was very active historically in bear markets. Like the first 2017, I mean, it was a huge haven to Synthetix overhaul.
Yeah.
Look, a lot of it perhaps was the core team, the Haven team, and other people that surfaced from within the community and the Discord. But then over time, we've had other kind of ups and downs, and I just remember the amount of upgrades on this sort of cadence of every 3 months or so. But
So I think just to be clear, right? Like governance is as lively, if not more lively than it's ever been, but it's static, right? Like there's no attempt to improve the governance, right? So it's like we have all of these governance issues and things that should be improved. Like the most obvious one with Synthetix is the protocol DAO, right? Protocol DAO is the multi-sig that governs the thing, and I've been saying for years we need to get rid of this. We need a mechanism to bring this fully on chain, right? And it's 2023, almost the end of 2023, and yet here we are. It hasn't happened, right? And it's like investing in something like that is just never going to be the highest priority. So and in spite of like the regulatory environment and like all the pressure that's coming, like we're still not trying to like push further decentralization. It's just a bit scary. And like when I look back, like where did it come from? As you say, it came from like probably 3 or 4 people in the community, including myself, who just like were obnoxiously agitating for, we need to improve this, we need to improve this, we need to improve this. And when those voices, are not active all the time, it shifts into this like kind of business as usual mode of like, okay, governance works, and like, no one's trying to like pick it apart and like work out what are the edge cases and the attack vectors.
Here's a thought experiment, because at one point you left the Synthetix Council, or your role as this sort of top-down command. You end up going a benevolent dictator. I'm taking a less active role, and then you had to come back after a year or so, saying, no, actually, I think there needs to be a little bit more hand-holding here and top-down directive. And I think it's that tension of, look, for better or for worse, the regulatory environment has dictated decentralized as quickly and humanly fast as possible. And I think that comes with a serious trade-off of the cadence by which you ship, I unfortunately think, said differently, if you invert, if the regulatory environment was not such, I think you would not see this push towards rapid decentralization on the governance side. And you would more take an approach of Web 2, which is, like, for instance, Illuvium, your brother, like games, like just like, what are you decentralizing? The community has no say, doesn't know how to build a fucking game. They know how to play it, hopefully, but like there's a very talented team of artists, creators that needs to run ship, right? I've been on the council there. I think I was the longest standing council member there and the quality of the conversation was like, God, this is like talking to like kindergartners. Like, I'm like, there's no I look
It's,
at I
it's
look at
happening
Reddit,
everywhere. I think everyone feels
yeah,
that.
but that's what
You
I'm
know?
saying. Like, I'm like, there's no business for us to be talking about this. Like, I can. If you have an issue, you can call me, and I can hopefully hear you out and be a therapist as an investor, not get in the way. But I'm not here to like, you know what I mean? Like, if you're putting a responsibility for me to vote on these, like, I'm sorry, but it's above my pay grade. You know what I mean? And my question. So that was the context for all of this. The question really is, if we can get some regulatory clarity where tokens can actually have a fee revenue generation model, can be kind of these hybrid, whatever we want to call them, and we don't have to dance around this decentralization theater that happens at times. Do you think that the type like how would you waive in that scenario? How would you go about like re-architecting governance, or do you even need to have these things?
I sometimes wonder whether like the very adversarial and progressively more adversarial environment is actually not like a feature, right? As painful as it is, it's like natural selection, right? There's this forcing function that's sort of culling the weak, if you will, right? The projects that are not willing to decentralize, or this chilling effect, right? Of and forcing everyone to like actually be decentralized in a way that I think if regulators were like, "This is amazing, this is the best thing ever," we would be completely centralized. Like, what would be the incentive to be decentralized if regulators were like, yeah, great, keep going? Like, it would be just FTXs all the way down. Like,
Well, I want to challenge that because I think
sure,
the problem with FTX was transparency, I think.
yes,
Now, if you have an environment where you build in the open, it's an open source project. I think you can verify proof of funds, you can verify the source code, you can verify all
for
these
sure.
things, while still, maintaining control. And I think if as a token holder, I think we can crystallize the type of like governance rights that a token may have. Now, of course, a lot of people, there was no board in FTX. Like, it was just
Yeah.
like, but I think,
Look, FTX
yeah,
but like
it's extreme. Yeah.
Luna's not far off though, right? Like
That's true.
Luna was its own blockchain, right? How did Doe manage to centralize that thing so effectively, and yet it was like a blockchain? It's pretty impressive, right? People will find a way to maintain control and hold. And so, if there was not a forcing function, like this is about control, right? For me,
Right.
the decentralization is about ensuring that you do not have like some top-down hierarchical control mechanism. That's what, like, I think it's a better coordination mechanism, right? And
Sure.
so if we're not using it for coordination, if we're just using it for like open sourcing the software and making it available, whatever, that's valuable, and I think that would continue, right? Like people would deploy things like Uniswap or whatever, right? And maybe we'd have more stuff like that. But the interesting thing to me, or one of the most interesting things, is like, how do you actually decide what to do? Like, what's the coordination mechanism? And I think having regulators who say, if this person controls this thing, I'm coming after them. All of a sudden, you have to be like, well, whoa, how am I supposed to do stuff if I don't control it?
Yeah. Well, you
That's
have
not a
to.
thing that we've had to deal with. Like corporations, it's like, no, I control it. I'm the guy. I'm the CEO. I control it. I
Mhm.
do. You can
Yeah.
be the CEO of like a Linux distro, and you release everything open source, and you have like some weird revenue model, but the control and decision making process is still top down hierarchical.
Mhm. Yeah. Yeah. I mean,
So yeah.
I guess what you're saying is that comes at the expense of like efficiency, and that's just the necessary trade off that one does when you try to build in a decentralized open source context.
So I won't. No, I will actually. Like I was gonna say, I'm not gonna explicitly call this out, but like I have a thesis, right? That if we had not been under such duress, right, to decentralized decision making, that the vast majority of projects, and like let's take Ethereum, right? And I'm sure some people will be like, no, this is not right. But honestly, I think if the Ethereum core devs had been operating in like a single room together in an office, working on, you know, some of the problems like Plasma, whatever, right? Like we would have gotten to the merge and we'd be where we are today, like in 2018, right? The fact that it was this like distributed coordination mechanism where no one was allowed to have control and what, you know, and like I would argue Vitalik had significant power, right? If not control over those decisions, but like the latency of communication and how everything flowed versus like what you see if you have, you know, a startup where there's 20 people in a room and they're just like focused on this thing. I think it would have been a very different outcome and a very much faster outcome. And part of my reasoning behind that is I've seen the same organization in two different structures, one with like more uncertainty, deliver faster. This is Synthetix now I'm talking about, right? You know, we had more uncertainty in 2018, 2019, and we delivered faster the wrong things, to be fair, but like we coordinated around the things that we were trying to deliver so much faster and so much more efficiently than we do today. Even though today we have much better sense of where we're going and like we've narrowed the problem space and you know, it's clear what thing is. And it's like, and it's crazy because I actually sit there with people in Infinex, right? And, you know, Infinex is consuming this protocol. And so Infinex will be like, hey, have you guys thought about this thing? Like, we need this thing to work this way, right? And there'll be some conversation that happens, right? And you can literally plot the conversation from 5 people in a room that are like, we need this thing. And it goes, and then it literally goes, dude, 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 dude. And 2 weeks later, it's back to those people being like, yes. It's like insane how high latency this is. Like, it's like you would sit there and think like, I'm actually joking. And I swear to you, I'm not. I've seen it happen multiple times because trying to coordinate things in like different people, like the three of us, we've got 3 different time zones. It's midnight for me. It's 7 a.m. Like, you know, like it's just so much harder. And I think people massively underestimate how much harder it is. And I've like watched these things in parallel and like it's blown my mind.
Is that I mean, it sounds a lot like a bug. Is there some feature component to that where you might surface more insights because of this wisdom of the crowds? You're now allowing more people. I mean, because the academic theoretical might say, well, you know, you're pushing decision making to the nodes, and the nodes really know better. But sometimes, like, I'm
but
more of the camp that
no great things ever got built by a
this-
committee, and that's what's happening
well,
in jazz right now.
well, look, I mean, I think it's an interesting socioeconomic, like this coordination experiment that is happening in blockchains is really fascinating. Anyone should just be paying attention. It's like because the coordination is marginally faster, more incentivized because there's real value, skin in the game. But in spite of that, people are like, it's still really slow. And you could say the same thing about a democracy. In theory, when you're voting, and people vote with their feet, but when they're voting, it impacts their taxes, their schools, their hospitals, like, and still they don't even show up to vote or vote for, you know, terrible people. It's really shocking. So I think this wisdom of the crowds idea is so popular in crypto, but people don't really understand that.
But it sounds
It's
like
not
Kane
always
is already.
true.
Kane, are you arguing that when you think about DAOs, like it sounds like mostly bugs, but there is this one overarching like good feature, which is it's a protective feature against centralization of power?
I think my theory of what the feature is that you go slower, right? And you go down fewer dead ends, let's say, right? Like while I was running Synthetix as, you know, the dictator, the actual dictator, right? We went down many dead ends, right? Because you're sort of biased towards action and you're like, let's try this thing. And you know, and so there's a lot of wasted resources, I would say, right? And having like unilateral power just creates that kind of problem. At least in, you know, again, it's one data point, right? But like you see more of that. And by forcing people And I was trying to explain this to some people at Infinex today, right? Like by forcing people to go through a process of approval that really needs to represent like the overall constituents in the thing that they're building, it like I think it puts a level of rigor on the thinking that sometimes can slip in like a startup environment where it's like move fast and break things, right? Like it's like move fast, break fewer things, ideally. So like that's the feature. But the thing that I'm describing is like just not even that. I think you can have like a fast moving thing, and then it does a whole bunch of things, and then it turns up and it's like, what do you think of this? And then you have this mechanism where it's like, yeah, not quite, go back and try it again, right?
Hmm.
And so if the thing that's like trying to do all the coordination and solve the problems is a group of people in a room, and it's like every day they turn up and they're like, we think we solved it, right? And then the people that are vetting the solution are like, you didn't quite get it there, right? It's much easier to sit there and like judge the solution and like make a decision as to whether or not it's like fit for purpose than it is to actually solve it, right? And if the solving takes like 2 months because the people are spread all around the world in like 80 different time zones, then you have the solvers going out and then they come up and they're like, does this work? And people are like, no. And it's like, okay, cool, we'll see you in a year. And then they come back and it's like, what the fuck is going on here? Like, no, like we have to have quick solvers and then still the mechanism that like vets the solution.
Yeah.
If the solvers are the people who vet the solution, they can lose their minds and they can go off and be like, we've solved it. And they're off in the wrong direction, right? You need a check on power there. And that's where I think the DAOs, like, that's where Synthetix works, and it forces the solution to be like vetted and make sure that all of the people are accounted for. It's not perfect, but like, I think it's a novel way of coordinating things.
Yeah.
How would you go about solving some of the challenges? Look, I hear you on the higher rigor as it comes to decision making, more accountability on chain. Like you're voting, it's registered, recorded. People now understand how you vote, and I think in the case of Illuvium DAO, for instance, as every 3 months or so you get a rotation, right? So if the community doesn't like you, you're out, right? So there's higher degree of accountability than there is in, I guess, other political systems. Um, but how would you go about just going like increasing the cadence of shipping of just actual output from a DAO?
I mean, the thing that I was complaining about is a single person who has been on multiple different councils in multiple different capacities, right? And I can only assume at this point it's just like grifting, right? Like just grifting DAOs, right? Like you get a DAO stipend, you turn up and like, maybe you do some stuff. And I think like this person, the first couple of epochs that they were on, the Synthetix Council, they were fairly involved, and then for whatever reason just stopped being involved, right? And so when out of nowhere in the last minute they got elected to the Infinex Council, I was just like, what are we doing? Like, how have we forgotten about this person? Right? Like, how are we letting them? Surely, and it's because it was a new set of voters. It was like a novel set of voters, and they were just like, this guy has a large following on Twitter. Like, it's got to be legit, right? And there was no other like kind of background to like vet this person. Like, has grifted 18 councils over the last 5 years or something like that, right? And so anyway, so I was like, maybe they've turned over a new leaf. Like, let's see. And so I DM'd them and I was like, hey, like, what's your plan here? And they were like, my plan's to participate. It's going to be great. Whatever. Literally today, the first call doesn't show up, and I was just like. And so
Yeah.
the next thing is like come up with a mechanism to dismiss people if they don't actually like have criteria that people need to meet. And if you don't, if the government's in session and you don't turn up, then you're gone.
Mm-hmm. Yeah. I want to transition a bit and just kind of what your near to medium term outlook is for the type of activity that we'll see in Infinex. Like, or sounds like more engagement and interest is there, stablecoin activity is rising. Are we, like, people are more optimistic. What can we expect to see or what are you seeing, I guess, at the protocol level in terms of new signups and interactions on the app?
So we haven't yet, in my opinion, at least, measured the things that we will measure post-launch, right? We've got a mailing list of like 200,000 plus people that have signed up. The vast majority are airdrop hunters, I can only assume. But of those people, we've been able to like get some decent data that like there's solidly like high single digit thousands that are legit traders that, have then either connected an API from like Binance to show that they've got trading volume on Binance. Like it's not pure airdrop hunting, right? They're people that are actual traders that want access to the platform. So we've got this interesting thing where like it's going to be a closed waiting list process to like get on, right? And people want it's a new thing. Like of course people want access same way that they wanted access to friend tech or whatever. It's just going to be much more gated because of the way that margining works, and there's a finite amount of margin to access, etc. You're not going to be able to get 50 invites a day to kind of add people. So we're sort of seeing the demand come from real people, but ultimately, like our North Star is there's $50 billion of notional on CFI daily. We want that perps volume notional.
Perp volume,
that's what we want. Yeah.
What's the highest they recorded at Synthetix just for comparison?
I think just north of $1 billion, if I remember correctly, like 800. But there were incentives for a while, so I think we need to unincentivized highest volume, like circa 500 mil, maybe 600 mil. I think
that's not chump change.
So yeah, no, it's not nothing, but like it's still single digit percentages of the big pie, right? So
and I want to go just back to something that I want to crystallize in people's minds is like, why would, if the funding rate is not as competitive as in a centralized exchange, could just enumerate kind of the reasons why you'd want to go on chain. One is, I guess it's incentivized. So you're in hopes earning some sort of reward, which is okay. At some point, higher volume leads to more capital efficiency, and then you kind of bootstrap your way to that. The other one is just the mechanism's transparent. At times, their centralized exchanges haven't been as forthcoming or have defrauded users around this funding rate mechanism in times of high vol. You don't want to use a centralized exchange for, you have counterparty risk issues. What other reasons might someone kind of want to use Synthetix versus, continue to use a centralized exchange?
Yeah, so funding rate is one component in fees, right? Like the other is like your fill price. And so if you're like decent sized trader but not like a whale, this is where I think the competitiveness of DEXs has really improved over the last like 6 to 12 months. You can get better fills. Like you will get better liquidity on a ton of markets, right? Including like high cap markets all the way to like long tail markets. Not necessarily every single trade, but it's no longer like there's worse liquidity in principle on a DEX, and the only reason to use it is because ideological or whatever, right? Like you can legit, there's better ARB opportunities at times. There's better fill prices. There's lower fees depending on the direction of the market you're going. So like if you were a trader and you were saying, I'm not going to trade here at all, and I'm only going to trade here, you will get worse execution on average if you are not factoring this in as like one of your venues that you want to access. Now, if you're the type of trader that's like, I sit on Bybit and I don't touch anything else, all my assets are there. Okay, cool. We're coming for you too. We're going to bring you across and say, don't be on Bybit for all of these reasons, and we're going to give you better execution, lower fees, etc. But if you're the type of trader that's trading on 5 different exchanges, depending on market movements or whatever, and you're not considering this as one of your venues, you're just obviously missing out at this point. Like it's unequivocal.
Yeah, that's fascinating. We haven't talked about the challenges with other perps. I don't know if you want to go there, or do you want to talk about something else? I know we got, your time is valuable. So
Kane's like, look, I note it's 12:20 in the morning here.
Yeah. I think like the interesting thing about this is like you are building in public, right? And the trade-off that I believe that we get from building in public is not a personal benefit. You do not get a personal benefit from trading from building in public. Sorry, you get a societal benefit. So, like, what does society want, right? Like, society wants people to go out and do things, build things, try and generate new activity, whatever. And so society incentivizes people to go and take risks to do things by, ideally providing them with the benefit if it works, right? And so as a society, we should want like lower barriers to entry. We should want people to, we should want to maximize the reward and minimize the downside, right? Ideally for society, we want hundreds of thousands of people going out and making big bets for them, but small bets for society. That's how we progress, right? And so when you look at DeFi, what you get is like this shared playing field where like you can pick and choose little bits from each thing, and like everyone can learn from each other, right? The barriers are lower, the learning curve is less steep, right? You can really pick things up very quickly. You can turn up and like see how people operate their entire organization just in Discord. You can work that out, right? That is valuable to society. It's not valuable to Kane Warwick, right? It would be far better for me if we didn't publish how governance works. I would love it if like our competitors had no ability to like figure out, all of the things that we've done over the years, from like adopting an EIP style governance system to like, there's a litany of things that we've done over the years to improve how Synthetix works that have then been adopted by
Your
other people.
Synthetix staking contract that was used on everywhere.
Yeah, like there's,
Yeah.
as I say, like there's a long list, right? Like I'm sure that someone's done a tweet thread on it at some point, but it would be far better if all of those things had been close. From Kane Warwick, I would be, far better off personally if all of those things had been closed source and I've been able to use them as my own proprietary thing to maximize the return. But the trade-off for me is I get to turn up like I did in 2016 and be like, whoa, what's going on here? Like, how do we build these things? Oh, stable coins. Okay. And I was able to like bootstrap myself into this thing and be like, oh, there's a gap. There's a stable coin gap. Turns out there wasn't, but it looked like there was. And, you have a crack at it. And so, like it was better for me to get in, but once you become an incumbent, right, it's far worse. And so I think a lot of people like look at, people borrowing from different protocols or whatever, and it's frustrating. Like communities are frustrated. They're stealing our stuff, right? And yeah, like on some level it is, right? But like on a personal level, it's bad for people to steal your stuff. On a societal level, it's good. That's what we want, and that's why we do it. That's my like ideological reason for it. That's why we build in public. That's why we do open source stuff. That's why we don't do weird little, business licensee scammy things where it's like it's open source-ish for until whatever 2027 or something like that. Like I just find all of that like not okay.
Yeah. I mean, I think the Lindy effect that you get by building in public, like you still get some recognition, the marginal recognition, and it's just worth kind of revisiting what are the moats in open source in this world of open source software development. I think the pace of innovation is faster, and I think the people that are pushing that will get rewarded in other ways. Certainly not maybe like immediate financial, like I guess like IP stuff. I think that the whole IP kind of monetization is just for lawyers, and it just doesn't like the biggest challenge with investing in open source software pre crypto was that you didn't have a token as a coordination and incentivization layer. And I think that to me was the biggest novelty. All of a sudden you have a wrapper and you align developers and users collectively, especially early users and people that are contributing to even a DAO, to earn part equity in a token in a network that is building in the open. And that's the connective tissue. Now, if the protocol is not shipping or working, people are going to go elsewhere because there's no barrier, which is a feature, not a bug. Like the standard is just higher, I think.
It's bad for the protocol. It's good for the world, right? Like,
yeah, like the amount of consumer preference being created is massive, and that's the biggest winner.
We should abandon bad protocols. Like we shouldn't allow bad protocols to lock people in and not escape, right? It's actually funny you mentioned IP. I remember when we were shutting down the Haven entities, and the lawyers we were using to like go through that process. They were like, "But what will you do with the IP?" And I was like, "I don't care. Like, if it's like throw it in the harbor.
I guess
Who cares?"
you could now call them and say, well, DAO can take it and run with it. Or something like that.
Yeah, I know. But it's like the only IP is the code, and it's open source. Like, there's nothing else. We don't care about the Haven logo, although maybe it's now worth something. Who knows?
Kane, you've been on the pod now 4 or 5 times. 5 times. He's the number one. Most.
Yeah.
Wow.
Yeah.
Wow.
Well,
this one, I like.
It's funny considering the time differences here. Well,
yeah, I'm curious to see how this plays. It felt very rambly, even by my own rambly standards. So I'm curious to see how it lands.
Yeah. We're gonna have to have you on again, because I think, especially in bull markets, my anxiety level goes up higher than in bear markets. But I think it's important to have folks like you around to make sure that we're not losing sight of some of the mistakes that we've done over the years. And it's so important to just keep that top of mind, because there's another FTX out there brewing. You gotta make sure that it just doesn't get to the scale that it did. And some of the learnings that I think Synthetix has always been kind of an incubation kind of field for a lot of ideas, people that have come out of the Synthetix Discord and community. And a lot of the learnings that you guys have had, fortunately or unfortunately, have had to learn earlier than other protocols. And I think if other protocols can avoid those and look at that, I think it would be pretty interesting, I think, as a overall ecosystem to kind of leapfrog prior mistakes that we've done. And so I guess as a wrap, most of your energy now is dedicated to Infinex. Like you're kind of like 90% there, and still.
That's it. Yeah. I'm on the Spartan Council, so I get to get up early tomorrow morning for the Spartan Council governance call. So that's going to be fun. But yeah, like other than that, and again, what's the point of the Spartan Council? The Spartan Council is really there to like vet the solution, right? Is this the right solution? That's our job. So we're not there to prioritize or, decide what should be done. It's like we have an outcome. People will go and try and coordinate to like get that outcome, and they turn up and they say, is this it? And we say no or yes. Like that's our job. It's a pretty easy job, to be honest, right? Like, when you see it, like you see a good solution, you're like, yes, that's the solution. Well done, well implemented, right? Someone turns up with some, bridge to nowhere, and you're like, that's not the solution. I'm sorry. And like, you can just tell.
Yeah, for sure. Awesome, man. Well, it's great to have you as always.
Thank you. Thanks, guys.
Thanks for coming on.
Yeah, thanks, Kain. Hey everyone, thank you so much for watching today's episode. Really hope you enjoyed it. We wanted to take a second to just remind you about our upcoming Digital Asset Summit in London, March 18th to 20th. Santi and I got your back. Seats are limited, and we hooked you up with a 20% off discount code. It is Empire20. If you heard it earlier in the podcast, there's a little competition running at Blockworks to see who can drive the most number of tickets. So when you register for the Digital Asset Summit, make sure you use our code Empire20. See you in London.